the 24th of November. I'm Graham Wilson. For those who don't know, present members of the public and press who have joined us today for this meeting in New Shire Hall. There's a bit of an echo. Is that just normal, or I'm looking towards Dan at the moment? Should be okay. Okay, all right. Well, we'll just keep going and see what happens. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and tweet during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is taking place? Please. And it's on now. Okay, so please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. There's no fire alarm test scheduled for today, so if the alarm sounds, please leave by the nearest marked fire exit, which is through the middle doors on my left, and assemble in the car park. As this is the last meeting of Fiona McMillan, I would just like to pass my and the committee's thanks to her for all the sterling work that she has done over what feels like years and years, but probably isn't years and years, but years and years, in particular on Manor Farm and all the other advice that she's helped us through. So thank you, Fiona, for that. And welcome Linda Walker, who is our interim director of legal and governance. Thank you. And we hope to have a substantive director sometime after Christmas, but you're going to cover until then. So thank you, Linda. We move on to the agenda. Dawn, we have apologies from?
Apologies from Councillor Maguire, no other apologies, Chair.
Thank you. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? No? Okay, thank you. Item 2, we've received no petitions or public questions, so we can move on to Item 3, which is the public minutes of the committee meeting held on the 29th of September 2022. Members, we're being asked to approve the minutes of the last meeting on the 29th of September 2022 as a correct record. Just for your information, the point that Councillor Bowden made about specific mention be made in a future report in July about various allegations, which references that the committee, external officers, external audit and officers were convinced that those allegations were without foundation, has been changed and now appears in the minutes posted for the 22nd of July meeting. So we have picked that up and covered it on the web. Are there any other comments on the accuracy of the minutes? No? Okay, thank you. I see no objection, so we'll take that as carried unanimously. We now move on to the action log, and an updated action log was also included in the published papers for this meeting. Are there any updates or questions on this? Chris.
Thank you, Chair. It's to do with minute number 85 and the query around IAS 26 disclosure. And we've been given a very informative note from the actuary, which is at the bottom of the record, which I found very interesting. And I must admit, I did a little bit of research on it, and I had to agree that what the actuary says is entirely correct. And that is that the IAS 26 figures have to be based on financial assumptions of 31st March 22. And I checked IAS 26 because I didn't believe that it would be that restrictive, but it really is. So given that, my question and challenge, and it's not necessarily for an answer now, but to be in position by the beginning of February, assuming that that is when our accounts are going to be signed, is will the auditors keep open the possibility that they may need under IAS 8 to be a post-balance sheet note about changes which have taken place in the, since then, in terms both of the overall economic situation in the country and in the world, and also the scheme itself. So will they keep that option open and consider it right up to the time that they are actually going to, we're going to be signing the accounts?
Thank you, Chris. Mark, do you want to comment on that, or shall I invite Ben to come in?
I'm happy to comment on it. So as part of our introduction to agenda item 7, one of our outstanding procedures is subsequent events up to the point and date of audit opinion, which would cover all of that period.
Yeah, I accept it's standard practice, but we have a particular note here stating that they're not aware of anyone putting in a balance sheet note to capture general assumption changes on an IAS 26 report, and that is stated in the notes that we've been given on the action log. And it's because that's been specifically mentioned that I made this specific request, more than just the fact that almost by its very nature, an audit has to keep everything open until things are signed. But in this particular case, that really will be kept open, and it will honestly be considered.
Ben, you're joining us online. Is there anything that you'd like to add to that?
Not really. Hopefully you can all hear me. Okay. Not really, other than just say until we get the signature on the paper, we would, there's always a chance that there could be a going concern or a post balance sheet event that we would be willing to change for if that's what the auditor also felt was worthwhile.
Okay, thank you. Any other comments, questions on these? So we note that point that Chris has made, and we'll keep that under review when we come back to it again in the future. Apart from that, I think there are a number of other items which are covered in later papers, so we won't go through those separately, and we'll take the action log as noted. Thank you. Item 5 is the item on consultants and agency worker data for Q4 2021-22 and Q1 2022-23. Can I ask Stephen Howarth to introduce this report, please?
Thank you, Chair. This report is a standing item for this committee and provides data, in this case, on agency worker and consultant worker spend as a Q4 2021-22 and Q1 of this financial year. It also provides a bit of an update on some changes to process and internal governance to strengthen controls around particularly consultant spend. The report is fairly brief and has an appendix with some information on what consultancy spend has taken place in those quarters. I should draw the committee's attention to the data now, including some services provided via the highways contractor. Following review of the nature of some of that spend versus the definition of consultancy spend that we've adopted, we do think this ought to now be included within these reports. So like for like, spend in Q1 of this financial year is up compared to Q4, you'll see, but the change in the overall quantum is broadly attributable to a large budgeted annual consultancy piece of work in the highways service. In terms of the process changes we've implemented, just briefly, all consultancy spend now goes through an e-form process, which goes via the head of procurement and commercial services, the strategic finance lead for that area, and a senior manager as well. And that needs to be done before any new consultancy spend is procured. Finally, in terms of agency worker spend, there is a brief update again with the information and some comparators, and broadly the position there looks positive, I'd say. Thank you, Chair.
Thank you, Stephen. Any comments, questions? Well, if I can I'll start with a couple and then I'll pass across to Chris. First of all, just remind us, I know I say this every time, who Opus are. Secondly, on page 22, section 2.5, it talks about the taking out milestone expenditure. The average spend in the 2 quarters reported is an increase of 47%, which seems a big increase. And thirdly, can you confirm that consultants are all competitively let? We don't just, or they go through a framework contract. We don't just go out to the market and just pick willy-nilly. Should we just pick up Chris' point at the same time, just to save you going backwards and forwards?
Thank you, Chairman. I think the final point you made is a very interesting one, because I assumed there was a de minimis figure on that, and that certain consultancy figures, there was one, for example, in the schedule for £80. I assume that didn't have to go through a massive process, which would have cost us £800 to go through the process before we spent £80. So I'm hoping that the answer to your final question is going to be no, and that there is a de minimis, but we'll find out, no doubt, from Stephen about that. My question is the following. Yes, I noted the 47% increase, although I thought it was a bit strange. Let's take out milestone and then let's see what the increase is. If we're doing the exercise, we do it in full. Although I love all statistics, so I'm grateful to be told what the statistics are, both with and without milestone. But it comes back to the basic question: what are we producing this information for, and what are we going to use the information to do? Now, there is reason for agency workers in particular to be used. It's not necessarily a good sign that agency workers are being used, but it is interesting to see how much they are being used. And very often they are used because it's an absolute necessity to use them. There isn't an alternative. In fact, I think whenever there is an alternative, probably agency workers won't be used to solve particular problems. So it is interesting to see that, but it is little more, in my opinion, than indicative of problems elsewhere, rather than it being a problem in itself. So to that extent, it's an interesting number, but I don't think it tells us a very great deal in terms of the real data. For that, you need to go to individual departments and see, this is of course what we do in each of our committees, what are the problems with recruitment and all the rest of it. When we look at consultancy, it is very interesting. And I have to say that it may well be that the administration is making a lot of use of this. You are looking at all of those individual items, or at least the larger ones. I wouldn't get too worried about the £80 one, that you're looking at these and you're making decisions as to how it is possible for us to do what we need to do more cost effectively, or even better, how it's possible for us not to do things that we're currently doing if we don't need to do them. So I hope the administration is doing that. And if you are doing that, then I think that has some real value. But I just wonder, when you have some things, there was one in people and communities, for example, a spend of £14,475, and that was described as consultancy. It doesn't really tell you very much. I think that I found it very interesting, but I'm not able to make very great use of it. I hope the administration is making use of it, but could you just review what the purpose is that you are trying to get out of this, and if that purpose is being achieved? I'd hate us to get into the situation where this just becomes yet another report which is produced every month or every quarter or every 2 quarters, and it just is an extra burden for staff, and we don't make any use of it. So what value are we getting out of this? And I don't demand an answer now for that. I'm just asking that be kept at the back of the administration's mind. Thank you.
Thanks, Chris. Stephen, do you want to answer some of the questions as you're able?
Yeah, and do let me know if I miss any. So Opus is the joint venture that the council is a part owner of. It's an agency worker. It's an agency worker procurement firm, essentially. They provide most of the agency workers that we engage and can provide consultants. The increase of 47% quarter on quarter, and getting to Councillor Bowden's question about why would you exclude milestone from that, I'm actually not sure why that paragraph refers to excluding milestone, as the spend is pretty much the same with milestone month on month, quarter on quarter. But so I referred to the increase in my introduction in that there is another highway spend relating to a specific annual process to survey the network, which is the £241,000 line within place and economy as it was in the appendix. So that's essentially annual spend happening in one go in one quarter, which obviously skews the quarter-to-quarter figures and possibly gets to Councillor Bowden's question as to some of the utility of comparing quarter on quarter in this way. I can't remember what your third question was, Councillor Wilson. I can't read my handwriting here, I'm afraid. Sorry.
Was relating to how we competitively obtain the consultants. I can understand for agency workers, but for consultants, confirmation that taking account of de minimis is that there is some framework arrangement or procurement arrangement for them.
So the procurement of consultants it is procurement, goes through the same governance process as the council-wide procurement rules. That is part of that process. So in line with the procurement rules, if it is above a certain level, it needs to be competitively tendered. If it's below that, it needs to be subject to 3 quotes. And if it's below a very certain de minimis, I think 5,000, then it can be direct awarded by an officer, assuming that they, on the basis that they can justify it as value for money.
And your comment, Chris, about how does the administration use this information? It looks, as I'm looking fairly carefully at each line and thinks, as you are doing, why are we doing it using consultants? Why can't we do it using our own staff? Are there problems with vacancies or recruitment or something? And then trying to address those underlying issues. So this coming to us is the start of the process rather than the end of it, I think. Come back on that.
Given the answer you've just given, then I'm more than happy that that carries on being produced the way it is. I know it is an extra burden for officers, but if it is being used for that purpose, then great. Let's keep on doing it.
All right, thank you. Any other comments, questions, Simone? Thank you, Chair.
Personally, it's great to see these figures, but as Councillor Bowden has just said, I would like to see the budget figures against this, so we can see where there's an overspend on it, and to sort of ask why there's an overspend. It's great, we've got the figures there, but it'd be good to see what we expect to be paying to actually what we are paying.
Okay, that's good thought. Now, the only thing I can immediately think of is what budget would you set these against? Because often these are filling in within a broader budget heading for some activity which we're not able to deliver either in-house or through our normal mechanisms. But Stephen, help me out here. What should we be doing?
I think that's a fair comment on the challenges of doing that, Chair. And so with agency workers, we don't set a budget for the agency spend. It's generally covering substantive posts that would have been budgeted for. And in terms of consultants, again, in some cases there will be budget there if it's been planned activity or annual activity. In other cases, it will be potentially one-off spend being funded through reserves or something that wasn't anticipated at the start of the year. So really, I would suggest that is probably best to be picked up in terms of the monthly finance monitoring reports that go to the relevant committees. And if there is a material overspend, it would be reported through that route.
Are you happy with that, Simone?
Yeah, I am, but considering I'm not chair or vice chair, I may not see it.
That's a risk. We'll have to hope that the committees, the service committees, do look at it in sufficient detail to pick up this sort of nuance. Okay, go on, Chris.
Thank you, Chair. If I may beg your indulgence on this, Opus is mentioned in here because of its connection, obviously, with consultancy and with agency staff. And I fully understand the rationale behind it and how it, both in theory it works and how in practice it works as well, which it produces the results, and that's the justification for continuing to do it. My question is, and Opus has changed its name at least once since we started going into it, and there's more than one Opus company as well, and it's all based with Suffolk County Council, if I get the county council right. But my question is, when we entered into Opus, we put a loan in at quite low interest rates. Has that loan now been repaid, or is it still a loan outstanding to us from Opus?
I will have to check on that, Councillor Bowden, and I'll be able to get back to you if that's okay.
Let's pick that up in the notes, Dawn, so we don't forget. No other comments? So the recommendation is to note the current data on the use of consultants and agency workers stroke interims, which I think we have done. Yep, thank you very much. So we move on to item 6, financial reporting and external audit update. Stephen, do you want to introduce the report, and then I'll invite Mark to see whether he wants to add anything.
Thanks again, Chair. So yes, fairly briefly, this is an omnibus update on where we are with financial reporting, covering several financial years. So firstly, the audit of the 2021-22 draft accounts. So committee will recall that we published the draft accounts on time at the end of July, and the external audit by EY commenced on time per the EY work plan last month. The audit is broadly progressing well. There's nothing to bring your attention to it at this stage. The report provides a bit more background as to what is currently being looked at and where we are with several particular items of the audit. The report does state also that we are anticipating not hitting the 30th of November statutory deadline for publishing final audited accounts, and realistically that wasn't achievable given the timing of the audit, and is always very challenging for councils, particularly large councils, to meet. And indeed, we're hoping to finalise the audit as soon as possible and report back to committee on the results of it. That is slightly conditional on the national issue of infrastructure assets accounting, which we've provided updates to committee on previously, and which is referenced in the report. The government, I think, is consulting on a statutory override to that. I'm not sure if that's concluded yet, and it's certainly not in place to my knowledge. So that affected the progress of the audit of the 2021 accounts, and will do so for this current set of draft accounts if it's not resolved. The paper also provides an update on previous financial years before that, which aren't yet finalised due to outstanding objections being reviewed by the respective external auditors. The report sets out particularly the latest position in respect of the objections being reviewed by BDO, dating from, I think, 2017, 2018, and to which I'm not sure I can add much more at this stage. Then finally, the report updates on a couple of other matters that have interested committee recently, including that national infrastructure assets accounting issue, and also an expected increase in external audit fees that we've been warned about by the National Commissioner for External Audit Services, PSAA Limited, due to the pressures in the external audit sector. And we're not anticipating that is met, that the cost of that is met by central government, unfortunately, and factoring that cost in as part of our business planning process for next year. Thanks, Chair.
Thanks, Stephen. Without specifically mentioning them, the paper, what you didn't specifically mention them, but the paper does talk about BDO. And Stephen Moore, is there anything that we can add or do to encourage BDO to complete their work as soon as possible?
Thank you, Chair. I'm not sure I can say encourage. And I'm not sure we necessarily have much in the way of sanctions to lever either. We have spoken to PSAA for the benefit of members of this committee in terms of BDO's underperformance and continued underperformance. I have been in correspondence with the head of UK Audit and Assurance. Given his slow response, I actually escalated matters directly to BDO's UK managing partner, who equally has failed to respond to my correspondence and will be chased again following today's meeting. I have to say, I understand that BDO are actually stepping out of the local government audit market, but that, in my view, does not give them an excuse to continue to underperform with existing arrangements to the extent they've been doing with Cambridgeshire. So I will continue to escalate, but I think we are running out of many opportunities with which to escalate or otherwise seek some form of sanction, Chair, but we'll continue to explore options. Thank you.
I'm hoping we have a couple of suggestions over there. For Chris first, and then Alan.
Well, I can provide a couple of suggestions, although it is very unusual to be in this position in a public authority, I have to say. The first suggestion, which is a formal one, which you need to go through in order to get to the second, is to engage with BDO's official complaints procedure. And if you're not getting, I'm astonished you're not getting a response from the individuals you've written to so far. So I just wonder whether it would be appropriate at the, if you've given enough time for those responses, for you formally to start engaging with the complaints process. That will most definitely get their attention. Or if it doesn't, then things are even worse at BDO than I might have suspected otherwise. The second is, beyond that, if we don't get a response, or even worse, if they don't engage with us at that, ultimately there is the regulator who can be engaged with if it's appropriate to do so. I cannot believe it will get beyond the complaints process, but the complaints process will produce a response, I'm sure.
Just before I bring Alan in, who's the regulator? Is not PSAA then?
No, the regulator for BDO for audit is the Institute of Chartered Accountants of England and Wales. It was the committee which regulates. It was that one which I kept on mentioning at each committee meeting, but I'm now on the investigations committee rather than that regulator committee, so I can now speak about it.
Thank you, Alan.
I want to comment about something else, but I'll leave that till later. Chris's second point was what I was going to say was in terms of referring to the institute. Obviously, we don't get success. It seems very extreme that they're not even responding to correspondence, and normally that would be a reason to take it up further anyway, because it's against professional ethics not to respond within a reasonable time to correspondence or emails.
Okay, and I'm easy either way. Are you content that we encourage the chief executive to pursue this, or would you like me to formally raise the complaint?
This is something, Chair, which is actually appropriate for the chief executive to do, in my opinion. It's an administrative task, and it actually is rather a sensitive task in its way. It shouldn't happen, and I think that it's important that it's the chief executive who does it because of the seriousness of it.
I'm looking towards Fiona and Linda. Are you happy with that sort of action?
I think it should be the chief executive as well, if he doesn't mind doing it.
There you go, Stephen. Are you comfortable with that? That would be on next activity with BDO.
Absolutely delighted to take that forward on behalf of members and the authority. I think that's wholly appropriate next stage in escalation. And I echo Councillor Bowden's comments. I find it exceptionally disappointing in terms of the individuals I've already corresponded with and their lack of response or even acknowledgement in the case of one of the parties concerned. Thank you, Chair.
Thank you. Alan, do you want to come in with your other point then?
Yeah, my other point was around the infrastructure assets and looking at the 2.3.1 where it mentions government's begun a consultation about overriding. I just wonder what impact that would put, and Martin may not be in a position to answer or doesn't want to answer, may not be able to answer, whether that would impact the signing of the accounts next year if it's not been clarified after this consultation, whether we're staying with as we are on infrastructure assets or there's a new situation.
Thank you. Is that something for you, Mark, or should we invite Stephen?
I can elaborate a little bit on what Stephen has in his report. We have seen a draft of the statutory override and have commented upon it. So we are expecting it to go through on a revised timetable, which is now, I think, this side of Christmas. But it then has, as Councillor Bowden knows, a 21-day hiatus period before it becomes extant and live. So it should be in place, ready for sign-off at a February date for this set of accounts for the council, if that timetable is clearly adhered to from here on in.
Thank you, Mark.
Okay, Chris.
On that issue, it's an ongoing saga, this one. And doing my research, as I always do, I came across a notice about the statutory override, and I thought, great, it's all been done. And I relaxed a bit. And it wasn't for a few days until I realised that, unfortunately, was from the Scottish government. So Scotland has actually put the statutory override in, but in England, we're not in, or Wales, we're not in such a fortunate position. Now, the issue that we've got is problematic because the deadline for this keeps on going back and back. The latest deadline was the end of this week, basically. It was the end of November. And, sorry, next week, the end of November. And then it was put back to, quote, this side of Christmas, unquote. Now, it's not the only statutory instrument I'm aware of in government which has been delayed for various reasons. It just worries me, to be quite honest, that that deadline of this side of Christmas may not be met. And the reason that's relevant for us is if the statutory instrument isn't laid before Parliament by the middle of the second week of January, then it won't be in force in time for us to sign our accounts or approve our accounts at the date we've got scheduled for our next meeting. So we may need to have a contingency plan put in place that if the deadline isn't met for this side of Christmas and it ends up being sometime later in January than we can be comfortable with or that we can live with, what are we going to do? Are we going to reschedule our February meeting so that we can manage to meet that allow for the 21-day hiatus? Are we going to proceed anyway? And if so, would we proceed on a qualified set of accounts, which is highly undesirable to do? So I think that some thought needs to be given. We don't need to make a decision today, but I think that the chief executive in particular needs to be aware of this. And if there is continuing delay in the laying of the statutory instrument, that action be taken without necessarily reference to all of the committee, but it may be the easiest solution, in my opinion, would be just to put back the meeting of the Audit and Accounts Committee in February to a date more than 21 days after the laying of the statutory instrument. But I just thought it would be helpful to mention that now for contingency planning, just in case.
That's very helpful. And Stevens, presumably you've noted that and you'll consider it nearer the time. And obviously we don't need to make a decision now. We'll just wait and see what government determines. Okay. Go on, Chris.
On a different issue, unless anyone wants to carry on with that issue. Right. I found paragraph 2.3.3 extremely interesting about the policy in terms of adjusting our accounts for immaterial adjustments. And we've got 3 bullet points in there about where we, that is the authority, would retain discretion not to adjust. And I don't think I was particularly happy about these 3. The final bullet point, can't argue with. If processing an adjustment is significantly time consuming for little benefit, then why do it? So fully accept the 3rd bullet point. But the other 2 bullet points I was a little bit less happy about. The first being where the adjustment would impact our outturn position. And I'm just fearful there that I'm not worried about it from an accounts point of view, because of course it's an immaterial difference. But are we being less than rigorous than we need to be about adjustments to our outturn position for the management accounts for the current year if we have this attitude of not wanting to change our position? It rang alarm bells with me when I saw that, as though convenience of not having to adjust our outturn position, or rather the opening position that we've got for the current year in management accounts had some sort of precedence. So I just ask for that to be thought about by officers, about whether that is a justified reason. As I say, I'm not worried about an immaterial change to the accounts. What I'm worried about is, should we be using the identification of an error? Should we be using that in order to more clearly change our opening position in our management accounts? So that's the alarm bell which rang on that first bullet point. Do you want an answer to that one before I go to the second bullet point, Chair?
Let's see what Stephen's got to say about that.
I mean, the key here is materiality and the Chief Finance Officer's best judgment as to how material the issue is. I think the outturn position is particularly important because our financial planning for the next medium-term period will have been dependent on a particular outturn position. And it's sort of, there's materiality in the audit sense. There's also what our own sense of materiality might be. If it's a £10,000 difference, that's very different to if we identify a £1 million difference, which is immaterial potentially in the audit sense, but not necessarily in our sense. So it's very much a case by case situation. This I'm not aware of which ones this might have covered, if any, from the audit previously that would have impacted on this year. So, like I say, broadly speaking, we do try to not adjust the outturn position unless it is material in our own internal judgment for purposes of financial planning going forward.
But as far as Mark is concerned, the immateriality threshold is relatively high, isn't it? And this is implying that we might not adjust anything because of anything that he might find. And it could be £1 million. I can understand that if it's £100 or £1,000, we wouldn't bother, but £1 million is £1 million. So maybe, as you have described it, it's not quite as simple as we would not be adjusting it. There may be times when we will take account of something which the external auditor describes and make the changes, even though it's below the materiality threshold.
And from my perspective, that's why the last part of that point is key, in that it's up to the Section 151 officer's professional judgment, I think, to make that decision.
Does that help to reassure you?
And I fully agree with that, and that makes a great deal of sense. The one thing which we don't have as a committee is visibility of that, and that's not important from an audit point of view, but it is important in terms of ensuring that we have a system of accounts in place and a system of management accounts where people are making decisions using correct information. And the point that Stephen made is entirely correct. It's a matter of whether the opening position is materially or immaterially wrong, and that is exactly the right decision to make. Just we don't get any visibility of that at all, and that concerns me just slightly.
Go on, sorry.
I suppose I think we do report on all of the immaterial, unadjusted and adjusted differences in the results report and the accompanying paperwork, I think. And it might be that we're just not stating precisely what decision has been made in terms of if they are adjusting or not and why. So I think when we report on this year's, on the audit of the previous year's draft accounts, we'll make sure that is crystal clear to you. Yeah.
And that satisfies me totally, Chair. Thank you very much indeed. Very happy with that. Then the second point I was going to make was on the second bullet point, which I thought was an interesting argument, but I didn't buy it. And that argument was that we would retain discretion not to adjust where we cannot precisely calculate the adjustment needed. But an enormous number of figures which we have in our accounts are estimates. They're not precise calculations. And we always have to go on the best number that we can go on. So the idea that we may not adjust because we can't precisely calculate the adjustment doesn't really tie up. It's a matter of if the best estimate that we can make is significant, it may not be material, but it may be significant. If the best number is significant, then surely we should adjust for it. And the idea that because it's not a figure which can be precisely calculated, thereby means that we shouldn't adjust for it, rings. I can see smiles from Councillor Whelan on the other side of the room. She understands exactly the point I'm making. I don't think that argument stands up.
David.
Well, I think it's fair to make that comment when we bring the unadjusted differences, depending on precisely what the difference is. I think our argument in this case is we are obviously compelled to make a lot of best guesses and assumptions in the material items that are in the accounts. Where they are immaterial and we can't calculate the adjustment needed, we wouldn't necessarily want to adjust. We wouldn't want to be forced into making an assumption about what the impact is if we can't precisely calculate it and we're not compelled to make that adjustment. Again, it comes back to a bit of a discretion as to what the precise situation is, what the exact difference is.
I think that's helpful. I just wonder whether the way these bullet points are described should emphasize a bit more about the discretion and professional judgment which you're going to use to determine whether or not you make non-material adjustments to the accounts. Because if you read the bullets separately to the surrounding text, as perhaps some of us have done, you get a different impression of, well, we can't be bothered. And I don't think that's the case at all. I think you're going to take action in the vast majority of times, but there may be occasions where it's not appropriate. I don't know whether we want to change any of this or whether we just note that we've made comments on it.
The assurance of more information given by Stephen, I think, is extremely valuable, and we can hang our hat on that. But you made a very interesting comment just then, which may or may not be correct. And I'd like some clarification when you said that, as far as you were concerned, the vast majority of these non-material differences are changed anyway. And that wasn't my impression. But then I realized I had no justification for my impression. So I wonder if that could go back to Stephen, please.
You're a good point. I'm not sure whether I have either. And Mark is smiling too. Stephen, help me out here. Using your professional judgment, you will make adjustments where it is necessary and sensible and such like.
Our starting point is we adjust for all of the differences that come out of the audit process. No need for. It's important. This is not a policy statement. It's just trying to give examples to the committee of where we wouldn't adjust. But the starting point is we adjust, and only if it is within the Chief Finance Officer's professional judgment not to adjust, which might be for one of the reasons contained in those 3 bullet points. In those cases, we wouldn't. But the starting point is we do.
Right. Let's move on. What I would like to do is just go to section 2.2.3 on page 29. And look towards Mark. Could you just clarify, Mark, that this comment here that you will provide a decision as to whether to take any action on this front, the 2020-21 objection, by the 20th of January. That was the date I thought it was going to be, but now in a subsequent letter, I've seen a date in February. So just for the record, what is the correct date?
You're indeed correct. We were initially thinking of working to a January timeline, but within the process, there is a period of consultation with the objector, which would have fallen over the Christmas period. So we have pushed the ultimate date back to the 23rd of February to allow Christmas to be taken out of the period, so to speak, to give us sufficient time for that part of the process to be duly undertaken.
Chris.
Thank you, Chair, and thank you for that further information, which is really helpful. And it does raise a slight concern for me, although you know my opinion that I believe that we've now reached a situation which is correct on this, which is quite adequate for all the users of accounts, and there's no need for any further adjustment beyond what's already been agreed. So I think the matter is solved and settled to my satisfaction, but I'm not the auditor. What worries me slightly is if it is the middle of February before a resolution takes place, then we are signing accounts before that date, which could be affected by a different decision, which may be made by the auditors. So I'm just a tiny bit concerned that by pushing it the other side of the date for signing the accounts, we could be signing accounts which themselves will then need to be changed as a result of any decision which is made by the auditors. Now, I'm hoping, I don't want to go so far as to say expecting, but I'm hoping that the auditors will decide no further adjustment is going to be required. But I'm just now concerned about this this potential problem of going over the end of year account signing date.
Mark, do you want to help us out here, or Stephen?
So I think just need to be clear that paragraph 2.2.3 is talking about the process for dealing with a formal objection, and the report, or the way it is reported is for a statement of reasons as to whether we decide to take any action on the objection or not what the accounting treatment would be in a true and fair opinion on the set of accounts, which we have already opined. So it is a process point we're dealing with here, not an audit specific point for financial year's set of accounts.
That's
Okay.
extremely helpful, Chair. I don't want to prejudge what is going to be come out as a result of a process of consultation, but I am prejudging it and I like what I hear.
Okay, and my final comment is on page 30, 2.3.2, about the consultation going on for a new auditor to be announced later this calendar year. I just wonder when we will know and are able to publicize what that appointment is going to be.
So I think we've been told who the auditor is proposed to be, and we've been asked to feedback if we've got any justification why they shouldn't be doing it. So I'm hoping we'll be able to, or it'll be announced nationally by PSAA shortly, but I don't have any information on the exact timescales, unfortunately.
Okay, so it's for PSAA to make the announcement, and we will just keep an eye on that. And when that announcement comes, we'll make sure that you're all aware as well. Okay, any final comments, questions? No, thank you very much. So we have noted and commented on the report. Thank you very much. And we move on to the Pension Fund Annual Report and Statement of Accounts. And can I ask Ben Barlow, who's on the line, Fund Accounting Manager, to present the report? Ben.
Thank you, Chair, and thank you for letting us join remotely. We've had a morning of other meetings as well, so it's very helpful when we're based in Northampton, of course. Yeah, pleased to present the final annual report and statement of accounts. There's no material changes from the draft accounts that have been, I think it's fair to say, received quite well within the pension committee. This report, so the final accounts and the ISA 260 will be going to the pension committee again on the 14th of December, and after that the local pensions board. So if it's okay, to give you a bit of a whistle-stop tour on the accounts, I'll talk through the fund account and the net asset statement on page 89 of your pack. Apologies to any councillors that may have heard this already at the pension committee. I can see there's some of you there today. So to start with the fund account then, contributions have gone down from the previous year. That was as expected. That's in line with membership. There was actually increased deficits paid the previous year. So there's a reduction in deficits, which is really the effect that we're seeing there. And it's in line with what we'd expect from the 2019 valuation. Transfers in, they've gone down again. It's very much a demand-led thing, transfers in and out of the fund. We do have some more analysis on that. We keep a bit of a top 10 to see if there's any significant ones in any year. So there's no surprises there again. Benefits have gone up. We're happy with that. That's in line with increase in active pensioner numbers and also inflation. Obviously, that'll be a big story for next year's accounts. Payments too, this is really the transfers out. So again, that's a demand-led thing. We have got some analysis behind that gives us some reassurance there. Management expenses are largely unchanged. The drivers behind those are the main drivers. Some things have gone up, mainly sort of actuarial costs, some access management costs, and also some audit costs have gone up as well. But really, as a line, there's no significant concern there or change to previous years. Investment income, again, that's largely unchanged, but can be something of a red herring in the accounts, because really our managers are looking for market value return, not always what we're getting in from yearly income through market valuation is the main driver, and the income there is really something we have to show along with the SIP for guidance, but can be a bit of a red herring. But again, we've got more analysis behind that. Profit and losses on disposal, you'll notice that's gone down quite a bit. That's more really a story of how well the fund returned into 2021. There's a good return, but not as good as the previous year. So in 2021, there was a return of 25.9%, This year it's 9.9%. Again, you might not see a story like that in next year's accounts. If I move on to the net asset statement, which is on the following page, page 90, a bit short of this one. So the investment assets, they've gone up. That really just reflects the returns generated by our managers. Investment liabilities have gone down. This is really just an accounting thing. It was a timing issue in the 2021 accounts. We had a balance there that related to some derivative options that we hadn't rolled forward in time, or they just came around at the wrong time, really. They were brought back down as a number by May. So it's what you're seeing now is the really sort of normal sort of low figure we have on investment liabilities. Current assets, they've gone down. Again, nothing significant there. That's mainly led by the contributions accruals. So it's those that have paid their March contributions that come into the financial year of April. We need to do an accrual for those. So it's those that have paid between the 30th and the day that they're supposed to be in, which is the 19th, and we accrue for those. And then finally, the current liabilities, again, largely unchanged from the previous years. The main driver there is some balances in the payroll control accounts, but again, nothing that we're concerned about. I'll pause there before moving on to the ISA 260 if there is any questions on the accounts. And I've got Fiona with me, who I sit here and take the credit, but she does all the hard work on the accounts. So I may have to pass over to her if it's too technical for me.
Thank you, Ben. At some stage, I was going to invite Alison as chair of the pension board just to say a few words about the accounts and the audit and whether you're happy with it.
Yes, first of all, thank you to the officers and the staff in actually getting this to this state. I think, from my perspective, it's been good to have that level of support as we've gone through getting these done. I suspect there are a couple of unusual things that people would like a little bit more information about, such as the valuation of the Cambridgeshire Bank, simply because it's not adjusted in here, but obviously the valuation is a complex thing which comes in afterwards, and that always raises a few concerns, shall we say. But overall, I'm very happy with what the figures are saying. I think that the bulk of the governance that we've seen is demonstrating that everything is happening as we would expect it to happen. As always, there are a few things which I think everyone admits could always be better. If everything was perfect, I'd be more concerned than ever. And in terms of the audit, it is good that we've actually got through the audit. Just dealing with auditors at the moment, is a challenging experience, mainly because they just don't have the capacity to deliver everything that we need to. But fortunately, we are seeing that there is nothing coming out of those either internal or external audits that we need to be concerned about. So I'm quite happy for these to be here, and hopefully you will be quite satisfied with them.
Thank you, Alison. Any comments, questions? Nick?
Yeah, I must say, I thought looking through this audit that this is a very well managed pension fund on the whole. I was very pleased also, page 66, the responsible investing policy, which is really very well thought out. I did, however, think that the targets that are being set are somewhat unambitious, with decarbonisation of the portfolio 23% by next year and only 57% by 2030, and no real ambition after that. So I wonder if Alison or Ben could comment on that. The other couple of comments on page 69, the asset allocation. I thought the fixed income was quite a low level there, 14%, and actually being squeezed a bit. Does that have any implications if we were to have another crisis like the one that accompanied the mini budget, where fire sales of bonds caused a very serious problem? And finally, I wonder if you could just say a few words on page 116 about the illiquidity in the portfolio. Is that mainly property, or is it private equity that makes up that? Thanks.
Ben, do you want to answer those? Is that appropriate, Alison?
Yes, there's no problem. I mean, probably on the responsible investment point, I mean, I know it's really the accounts that I'm bringing here. Responsible investment, we do have our climate action plan and a lot of detail on the website. We also follow guidance from Mercer's, our investment consultants, and it's an ongoing discussion. I think it's fair to say, Alison hopefully will agree with me that it's an ongoing moving platform, this, and every investment subcommittee and pension committee, we look at our policy on our responsible investment. We also are part of the access pool, and we regularly meet with other access pool members, as well as the wider LGPS, about our responsible investment. So it is very much an ongoing story, that. Your second point on the fixed income, we do have, and the asset allocation as it is at the moment, we have a investment strategy review planned for February, when we'll be looking at basically how we should carve up our investments and any changes we might make to be more suitable to the current atmosphere. With the gilts issue around the mini budgets and what happened there, we are reasonably safe from that particular area. It's more something that is affecting private pension schemes, which you might have heard of in the news. So we have done a bit of work with our consultants around that, just to provide extra assurance, but we're not in that headline group, if you like. And your third point on liquidity, we have both private equity and property within the fund. They would both be categorized as the less liquid assets, if that answers your question.
Can I just come in there? Sorry. That figure includes property, infrastructure, and private equity.
Thanks, Fiona. Alison, you're twitching.
Trying to persuade the speaker to stay on. Picking up the point on climate change and the ambitions of the fund are actually only able to be set for a short number of years. We set that target with things that we knew to a degree would be achievable. The officers will tell you that they have had rather a robust challenge on a lot of those on a frequent basis from me, not necessarily in public, but it has been challenged. There is also an awful lot of discussion. We have to remember that despite what we would like to do, we have an overriding duty, which is to ensure that the pension fund is able to meet its obligations. And I think that everyone would be horrified if we came here and said that we had taken actions which, yes, made us appear to be, at the forefront of reducing exposure, but at the same time, we now can no longer pay our pensioners as and when we are required to. And we have to take that duty into account. And that is one of the reasons why perhaps it isn't as strong as I would like it to be, but it's as strong as we can make it without actually breaking the fund, as it were. We do keep it under control. We do keep it very, very much under review. We've got a number of things that are happening to change where the fund is, and there will be a number of things coming forward over the next few months, which sort of demonstrates our commitment to this.
Chris or Alan, you're both members of the board and investment, the pension fund committee and the investment subcommittee. Is there anything further you'd like to add from an audit point of view?
Not really, no. I mean, we discussed this at the pension fund committee, but it's a very strong set of accounts. I think it's in a very healthy situation.
Yeah, I'm actually surprised by how robust the pension fund is at the moment. The trouble is with pension funds, they change remarkably rapidly. So just because it's robust and good now doesn't mean to say it will look the same in 12 or 24 months' time. So it's a matter of constant vigilance. But given where we are now, I'm really I'm pleased with the overall picture. There was one issue within this which I think is worth bringing up, if only to follow up on the previous discussion we've had. There was an unchanged, uncorrected difference which was identified in the accounts of some £10.25 million, which represents about 1/4% of the net assets of the fund, and materiality for these accounts is 43 million. So it wasn't a material error which was found, and although this shouldn't make a difference, I know, Mark, but it was an understatement of value rather than an overstatement. I know that shouldn't make a difference, but it gives me more comfort. But it happened in a rather strange way, and that was that there were apparently 3 level 3 funds where actuarial valuation had been obtained at the end of December, and then the transactional changes were processed, but the new actuarial valuation wasn't available until too late to insert into the accounts. And my question is just to ensure, and I don't need an answer now, but I think it's important for us to ensure that we don't find ourselves in the same position every single year. It would be most unfortunate if systemically we weren't able to get an actuarial valuation at the time when we need it in order to get it into the accounts. So if this is something, if these are particular investments which are long-term investments, or if they're of a nature which are likely to recur in another way, I think it's really important that we ensure and we put pressure on the relevant actuaries to get the information to us at the right time.
I think from that perspective, you're absolutely right. The fact that it's a positive variance, kind of like, okay, well, most people look at that and say, well, you know, that's great. It doesn't matter that it isn't adjusted for. But yes, if it had been the other way, it would be most unfortunate. And if it had been actually the materiality whereby it needed to be adjusted, it would be most unfortunate as well. So looking to how we can best get those valuations in a really timely manner would be the best thing we could actually have.
Okay, and Chris's comment was, are we confident it won't happen again in subsequent years? So whether that's something that you or Ben's got his hand up.
Yeah, I mean, this is something that we push our partners as much as possible to get this data in as quickly as we can, so we don't have to have any of these unadjusted situations. I think the point is here we would have adjusted for it if the auditor had specified that it really needed to be done, but it's one of those where it's time consuming for little benefit almost in a way. But certainly for getting the data in, we're always pushing our partners, and we will continue to do so, and we'll raise this as a particular example of something we want improved next year.
Okay, thank you very much. Yeah, shall I invite Mark just to say from a EY point of view that you're happy with what you've discovered?
Certainly. So from our perspective, a very good audit executed to the planned timetable. And as you can see from the draft opinion in section 3, we would be proposing an unqualified audit opinion when we get to that point in time. So we only do have that one uncorrected difference as a result of all of our procedures, all of the risks that we presented to you in September, we have gained sufficient audit assurance over, and it is only the evaluation of level 3 investments, not primarily Cambridge and County Bank. I have to say it's the other level 3 investments that have driven the 10-point £2 million unadjusted difference. Clearly, that is a timing difference from an audit perspective. The best estimate was made for the draft accounts at the time they were prepared, and the statements came in July with respect to the 31st of March. So clearly we have the most up-to-date accurate position to reflect to you. And in this case, it was not material. And therefore, we don't require adjustment. In other years and other audits, it has been far nearer materiality and has potentially been going the other way. So we have sought more robustly adjustment for it. But in this case, at 10.2 million, it is well below the £43 million materiality, as Chris said. Otherwise, I think we would thank Ben and Fiona for the support during the audit, and clearly a really good audit results report to have in your papers today.
Thanks, Mark. Ben, just finally, there's on page 175, there's a list of outstanding matters which Mark has raised. Are all these in hand? Do we need to be aware of any which are causing us difficulty?
Yeah, certainly. And I think some of them are already ticked off. Fiona, do you want to come in on those?
Yeah. So the response to the annual letter to internal audit, that's been completed now. Subsequent events review, agreement of final set of accounts, and final review of procedures. I understand this is what EY do just before they sign. And the middle one, which is management representation letter, I think that's been signed now as well.
Okay, thank you. And then on page 166, if I can read my writing, that it talks about various fees to be determined or to be confirmed. Have these been resolved to your satisfaction? Is there still matters outstanding there?
I believe they're things that happen towards the end of the audit when we get to the signing date. Is that correct, Fiona?
I think this is one for EY to answer.
I just didn't want to be surprised, Mark, that you're suddenly going to stick in a bill to Alison for loads of money.
Clearly, there are additional fees in relation to the second line and additional professional regulatory requirements as there have been in previous years. The 2021 one is just been determined, I think, by PSAA. As you can see from the audit results report, the audit itself has gone very well. Very few additional procedures, so the second line down would be far less than the previous year when we had more significant issues to deal with.
And Alison, you're content with what's the EY audit report?
I'm very content with the report. Never content with the fees, always far too high. But yes, I'm actually very content with the report, and it is really good. Once again, you know, without the officers and staff keeping this under control, then we wouldn't be in the position we're in.
Well, thank you, Ben and Fiona. Can we record our congratulations to you for a very clear and audit and set of accounts, which makes it very easy for us to review and for Mark then to audit. So thank you for all your work on this. So we've noted and commented on the report, and we move on, and we've approved the final statement of accounts and noted the annual report of the pension fund for the financial year 2021-22, and we have reviewed the findings of the external audit documented in the ISA 260. And we move now on to item 8, which is the external review of compliance with the public sector internal audit standards. And can I invite Mairead Claydon, Head of Audit and Risk Management, to present the item, please?
Thank you very much, Chair. So this report is bringing you details of an external review of compliance with public sector internal audit standards. These standards recommend that public sector bodies should undertake an external review of their internal audit processes and procedures at least once every 5 years. And at Cambridgeshire, we conduct a self-assessment of our compliance with PSIAS, as I'm going to call it for speed in this meeting, annually, but we last had an external review of compliance in 2017. So in 2022, Steve Crabtree, the head of internal audit at Peterborough City Council, has conducted that external review for us as outlined in the covering reports. And we've provided a full copy of the detail of his assessment and conclusions as the appendix to our report. The conclusion of the assessment is that the Cambridgeshire audit team fully conforms to the requirements of public sector internal audit standards and the SIP for local government application note. There is one attribute standard where an element of partial conformance was noted, but it was confirmed this did not have a material impact on the assessment. That related to the fact that customer feedback questionnaires were no longer being issued after the service's disaggregation from the former LGSS internal audit. We have reintroduced a new online customer feedback questionnaire already back in July, and we're now circulating this with final reports, draft reports, etc. And we're also planning to approach CLT members around March, February every year to get a sort of overarching view from them of the performance of the audit team in year to inform both the annual reports and our forward planning. So towards the end of the assessment, you'll see that there are a number of actions that we've committed to undertake to address some of the areas that Steve Crabtree felt we could strengthen further. Those are going to be incorporated in our team's quality assurance and improvement plan, and we're aiming to have all those actions implemented by May 2023 to link in with the timing of our next annual report, which will come to this committee. So we'll give you the update on implementing those actions at that point. Thank you, Chair.
Okay, thank you very much, and congratulations on a very good report from Peterborough. Any comments from anybody? Go on, Chris.
Okay, just to show someone's read it. Yes, very well done. Congratulations on that. And it's all too easy to understate the importance of internal audit. Internal audit is very much in the background, and you rarely see internal audit playing a very visible role in what happens. But from experience elsewhere, not my personal experience, but from experience elsewhere where things go wrong, internal audit is one of the areas where you need strength so that if other things go wrong in the system, internal audit catches it. And when you have internal audit failing as well as another part of the system, then you can find serious problems occur. So with all due respect, internal audit is not the most glamorous part of the functions of the council. It's not even the most glamorous part of the audit and accounts functions of the council, but it is ever so important. And I think all of us really need to recognize that fact. I read this, and there were two things which were in the paper which I just would like some expansion on, and my apologies if I should already know the answers to these two questions. And the first is really, if you don't mind, Chair, for the Chief Executive, and that is the direct reporting from IA no longer being to the Section 151 officer, but it's going to be to the Executive Director for Strategy and Partnerships. And I'd just like, I can see pluses and minuses in doing that, and I wonder if the Chief Exec could just expand on that, please.
Stephen, good question to ask. It's very timely. Any comments?
Chair, absolutely. Thank you to Councillor Bowden for the question. As part of the council-approved corporate leadership team restructure, members may recall that the role of monitoring officer, which will in future be service director, legal and governance, as one of the three key statutory officers in terms of the overall corporate governance of the council, the other being Section 151 chief financial officer, and then myself as head of paid service. To ensure that we have appropriate checks and balances and recognising practice in other public authorities, moving the internal audit and risk management team to report to the monitoring officer rather than into the section 151 officer was something that was a purposeful change in organisational design I put before members of the Staffing and Appeals Committee and Council. That model is one I've seen operate very effectively elsewhere, and actually will give Mairead and her team, dare I say, more freedom to go beyond purely financial audit, which is quite often a large proportion of their work. Having them reporting into the monitoring officer means they have that broader support from a different statutory officer and don't get, dare I say, where I've seen it elsewhere, squeezed into purely financial systems audit, which, whilst hugely important for our overall assurance regime, is only part of what they should be looking at. That was why the intentional move was to have Mairead and her team move into legal and governance, reporting directly to the monitoring officer. I hasten to add, for the benefit of members, and reflecting very much on Councillor Bowden's comments, I also recognise the importance of the internal audit function. I meet with Mairead regularly on a one-to-one basis, as I would expect every chief executive in a public authority to do with their chief internal auditor. I also have to say, I think the PSIES compliance output is very positive. Having equally had that undertaken in other authorities, I'm very pleased with the outcomes. I guess one of the challenges Mairead would highlight, and probably didn't draw huge attention to in the report, is the ongoing challenge of recruitment for capable and qualified and, dare I say, experienced internal audit professionals. That's a challenge shared by Cambridgeshire with every other local authority and many other bodies beyond the public sector, dare I say. But in terms of that, what I can best describe as an improved approach to corporate governance and checks and balances. That's why internal audit now reports into the monitoring officer as we move forward. Thank you, Chair.
Okay, Alan.
The chief exec's just touched on one of the bits I was going to say in terms of recruitment, reading on page 192. And obviously it's important we know the difficult situation there is in terms of recruitment. Obviously, it's an important area, and I hope it's one that the administration don't. We need to keep the numbers up in this area because it's very important. But just touching on one point in here, it says we don't have a separate audit software package. I just wonder, I have no idea of costs or whether that would make the department more efficient, and not necessarily for an answer now, but it may be something we could look at. Could it make resources spread further if we've got an audit software package that actually saves some of the time?
Okay, thank you. If you could just address the software package bit in just a moment. I wanted to pick up first on Alan's comments about resourcing and vacancies, and looked perhaps towards Stephen for reassurance that Mairead will get all the assistance that she needs. Not only in this report, but I think in the next report as well, it talks about the limits on our ability to do certain investigations because she's short of staff. And I'm certainly will be fighting for internal audit if there's any discussions amongst the coalition, but the administration. But we do need to ensure that we are delivering on what we're being asked to deliver on internal audit. Stephen, you are giving Mairead all the support that she needs.
Chair, I suspect that's probably a question you should ask Mairead. In reality, in terms of resources for the internal audit team, I think if memory serves correctly, we currently have an audit and risk manager and group auditor position, both currently advertised and trying to be recruited following unsuccessful attempts earlier in the year. So we're continuing with that work. In addition, we have support going into the internal audit team, drawing on our highly successful SIPFA finance graduate trainee scheme. We had another intake of graduate trainees earlier in the year. I met with them actually just last week. At least one of those individuals is dedicated into the internal audit team, and I think another one is also doing a placement within within internal audit to gain that skill set and rounded experience, as well as obviously working with Stephen and finance colleagues. I think recognising the challenge we have in the audit sector as a whole, that continued emphasis on trying to grow our own is one of the ways we will have to keep applying to try and get there. But yes, in terms of overall support from Mairead and her team, I would just like to suggest that that's as strong as I can make it. In terms of capacity to deliver the audit plan, Mairead and I will, if need be, revisit whether or not we need some external specialist audit capacity. There are areas in the plan, for example, that IT being a good one, there are occasions when externally sourced audit capacity with specialist expertise in that area might be necessary to complement the in-house team. And finally, Chair, I just hasten to add, I have actually had an effective co-source arrangement for internal audit delivery in previous councils. So a strong in-house team backed up by an external audit partner, obviously not the same one as externally auditing our accounts, but providing additional capacity for specialist audit activities. So those are the types of things we would certainly be willing to consider if need be. Thank you.
Excellent, thank you. So I could ask the same question of Mairead as the Chief Executive suggested it. Are you comfortable with the answers that you're getting? And when we come to your report about the work that you hope to do in subsequent quarters, you'll be able to adequately resource it?
Yeah, I'm very comfortable with the answer. I think I would again just highlight the graduate trainee scheme as being a really key part of our service forward planning. And to some extent, the turnover that we've seen has been as a result of the success of that scheme in terms of people moving on to some very good opportunities elsewhere. But partly due to the COVID pandemic, we saw an interruption in our intake, and that's what's really affected our ability to kind of retain and promote internally. So we're out to recruiting currently for those two posts, and I'm optimistic that we will hopefully get some good candidates in.
Thank you very much. And all these graduates don't have to be accountants. They can be all sorts of bright people. Right, thank you very much. The one question I wanted to raise was on the a relatively minor one about the survey results, that I was quite disappointed to see that only 25% of the completed questionnaires were returned to Peterborough, and a lot of the answers were not applicable, as if the response had come from somebody who was within internal audit or knew a lot about internal audit. Were we as stakeholders sent this questionnaire? And in which case, I apologise on behalf of me and the committee if we didn't respond, or just what happened and how did he take account of the views of stakeholders with such a poor response?
So to the best of my knowledge, the answer to that is yes, that at least some members of this committee would have had email contact from Steve Crabtree. The extent to which that was followed up, I don't know. But what I would say is that as a part of our development of the customer feedback questionnaires, I am very keen for us as a department to be requesting that feedback through our new online survey. We will be doing an exercise in February and March. I would be very keen to get members' input into that exercise, as well as senior officers, and use that to inform our service planning going forward, because it's always good to get feedback. And yes, we didn't get as much perhaps from this exercise as we might have hoped.
And let me just put in a plug that if you do get asked to fill in a questionnaire about what do you think of internal audit, then you fill it in, and we will come to later about what should be the role of this committee and what are your skills. Do fill that in as well, but we'll come to that shortly. Okay, thank you very much, Mairead. So we now move on to your next report, which is the internal audit progress report. And would you like to present this item?
Thank you, Chair. This is our regular internal audit progress report. So there are probably a few key areas that I would bring to your attention, and then happy to take any questions. So we have got section 3 is our regular update on progress. Since our previous report to this committee, we've not had any final reports with limited assurance or less. In section 6, we've got the forward plan from the last quarter of this financial year to the third quarter of 2023-24. We have reduced the number of days in quarter 4 and pushed some reviews back to manage capacity in the team while we're undertaking our current recruitment process. Then in section 7, you have updates on implementation of audit actions with the full details of those actions provided in Annex B to the report. Quite similar percentages to our last report. The key thing to notice is that we will be undertaking a review of capital project management in project delivery in December, and that will cover the 26 actions that have been sat in that table for some time. So I'm hoping that our next report to this committee will be able to bring you an update on the implementation of those actions. Section 9 is our fraud and corruption update. We've managed to close quite a few cases this quarter. We have probably had more whistleblowing cases to date this year than we have in previous years. Couple of key pieces of work to highlight in that area. Firstly, at section 9.2, we've completed a review providing assurance over a related party relationship with the former Executive Director of People and Communities. A close relative of the former Executive Director worked for a company that provided children's residential care. When the home shut, the council conducted a feasibility exercise considering whether or not to purchase that site to continue using it to provide residential care internally. Subsequently, it was decided not to proceed with that project. For the most part, no major issues identified by our review. Some historic weaknesses in systems, particularly looking at the interrelationship between related parties, which is a declarations of interest process that links to the council's accounts, and so that's sort of a finance-led process, and the declarations of interest process, which is led by HR in line with our codes of conduct. Those issues had largely already been identified by a previous internal audit looking at declarations of interest back at the end, I think, of 2021. So actions have already been put in place to address those issues. So there are a couple of recommendations that came out of this review, primarily around checking that where we receive a nil return for a related party declaration, double checking that to previous years to make sure it's not been overlooked, and introducing a declarations of interest process for project boards, which is already underway for being implemented. We've also conducted a risk assessment of money laundering risk for the council that links to the work that we brought to you previously around updating our corporate money laundering policy. That resulted in a good assurance over the control environment and a short action plan to further strengthen controls. We're also currently coordinating the upload of data across the council for the National Fraud Initiative. That is complete now, in fact, and we'll be receiving data back from this national initiative in January, at which point the internal audit team will coordinate the corporate response to that and how we investigate those matches to identify any areas of fraud, overpayments, things like that. And finally, sorry, it's a long one, section 10 covers key financial systems. We've had the payroll transactions report now provided from colleagues at West Northamptonshire. That's given a good assurance over payroll. We're also working with colleagues in finance to understand some of the work they're doing around payroll control accounts and to obtain kind of rolling assurance around how we're working to clear high balances on control accounts. And then in terms of key financial systems work that's led by the Cambridgeshire team, we have commenced testing accounts payable and debt recovery audits under the lead authority module, and we have income processing testing ready to start next week. And I will leave it there. Thank you, Chair.
Thank you, very, very comprehensive. Any comments before I start? Chris?
Yeah, I've got a few. Again, I'm not intending to be at all critical. As I say, I both value the work of internal audit, and I think that the work is done very well. The one thing which really shocked me when I read through this report, I think it was quite early on in the report, I haven't got the page number, was that the IT health check was still an outstanding item, and therefore it wasn't possible to get PSN certification. Now, I honestly can't remember if that's come before this committee before. It was this committee, was it, rather than going to, right? And I this is something which has been ongoing now for a significant amount of time after the previous failure, and it just seems to be dragging on. And I wonder, is sufficient priority being given to trying to solve this, or is it an insoluble problem which will take a significant amount of time? Because my understanding is that PSN certification is quite important in terms of giving assurance to other partners when we are dealing with other partners.
Stephen, do you want to answer that?
Chair, actually, rather than, first of all, agree with Councillor Bowden that PSN accreditation is an important standard for all public authorities to maintain. Secondly, I think we had a detailed discussion on this at the last meeting of the Audit and Accounts Committee, if I remember correctly. And in fact, we had a couple of senior IT officers in attendance to describe that to the committee. I think rather than taking any further than that, what I propose for members is we provide you a written update and make that an action log item, because I would also like to understand the trajectory for that work as well. Dare I say, Chair, part of the challenge could well be getting the Cabinet Office to review certification submissions, given the backlog they're experiencing at the moment, having arisen during the pandemic. Nonetheless, I would like to know where the Council is in its own process. So very happy to request a written update from members in the action log from the Executive Director of Strategy and Partnerships. Thank you.
I think that would be very helpful. I think I can't find it quickly either, but it is due this month, isn't it? I think, or that they should have resubmitted it to get the approval. But we'll get an update and check precisely what the situation is. Have you got other questions?
That was the only thing which I was really worried about, but there are a number of other things which, going through the report, I thought was worthy of mention. And you mentioned about AML and the actions which are being taken by the anti-money laundering activities and the actions which are being taken by the council, which is good. But the impression that I get is that some officers believe that anti-money laundering is about cash transfers taking place and making sure that we don't exceed cash limits, and especially the 15,000 euros or whatever the equivalent is figure which has to take place. And the AML activities are far, far wider than that. And I'm not convinced that that message has permeated through the organization, and that people need to be looking at the potential for AML in all sorts of things that they do in order to flag concerns so that investigations can take place, possibly uncovering all sorts of criminal activities which are associated with AML. So are you convinced that we really have got the concept of AML properly imbued within the organization, rather than just being a matter of cash transaction limits?
Thank you. It's a good question and a meaty one to get into. I would say that historically, probably no, we haven't had a strong culture of general widespread understanding of AML, what staff need to look out for, specifically in the context of public services, because often when you find resources online, or if you have sort of standard training packages, they're heavily focused on the financial services sector, legal services sector, estate agents, etc. So if you provide these kind of training opportunities to staff, they tend to think, well, that's just not relevant to my work. So the internal audit team, following the risk assessment that we've undertaken, one of the key actions that we're taking out of that as a team is to develop a bespoke training package using the council's e-learning, which we will target to a set of teams that we've identified as being particularly relevant for needing to have that awareness around money laundering. And that is going to have a really close focus on actually the types of actions that we as a county council take where there could be a money laundering risk, and on emphasising how people can find situations that may be risky and understand how to report them into the correct place. So I'm optimistic that introducing that, as well as having sort of a communications and awareness campaign around the new policy now that it's in place, will help us to embed that culture within staff, and particularly target it to the right teams who are more likely to be at risk of coming into contact with something that could indicate money laundering activity.
Thank you, Chair. It is those red flags which are the important thing, and in some ways it doesn't help talking about it as being anti-money laundering, because you're not necessarily seeing any money being transacted at all here. what you are potentially seeing, and particularly I have to say my fear is in social services, is that you see some red flags which indicate that something is behind that which needs to be escalated and action needs to be taken. So I'm pleased that action is being taken on that, and it's something which I think we need to do more of, to be quite honest, because it is a really serious problem, and it permeates throughout the whole of society. It's not something, it is, as you quite correctly said, it is not something which is restricted to financial services. The National Fraud Initiative has moved forward quite significantly over the course of the last 2 years, and quite a number of internal audit functions within the country are now engaged in quite high volume data checking with HMRC and with other local authorities as well. To what extent are we pushing that forwards, particularly with other local authorities within the county, but also with organisations such as HMRC?
Can you help us on that as well?
Absolutely, yes. So the National Fraud Initiative takes place every 2 years, and the Internal Audit Service at Cambridgeshire are the sort of owning authority, I suppose, at Cambridgeshire for responding to the National Fraud Initiative. So where it comes to individual data matches, pensions is a great example. You know, pensions will be matched to a variety of data from all different sources. And one example is information on deaths. So those matches would indicate to us where potentially the council has not been notified of the death of a pensioner for whom we're still making payments. The pension service will receive those matches from the NFI, along with information about how to interpret and understand and respond to those matches. And they will work through that information as a service, reporting back to internal audit in terms of volume, values, and the internal audit service is then there to support pensions in addressing those matches if you know, they have unusual or complicated cases where they need a bit of extra assistance to respond to them. But for the most part, that type of match would be led by the pension service as the relevant experts. Internal audit do get involved in kind of the day-to-day data matching where there are matches that don't obviously sit within another service. So some of the matches we have perhaps around, for instance, conflicts of interest is probably the best one that we look at within the internal audit service. So that will match our employees to Companies House and to companies with which the authority transacts. So that data match could identify if an employee has a financial interest in a company that makes payments to the council, and then internal audit will look through those matches and say, well, do we know that they're involved in that company on council business? Do we know that there is a declaration of interest in place and the declaration is being managed? Is it irrelevant because they work in completely unrelated services, etc.? But we investigate that type of match where it doesn't sort of clearly belong to another service. So we do get involved, but as far as possible, the data matching work is pushed out to the relevant services. In terms of the wider environment around Cambridgeshire generally, the County Council has been in talks with the districts around setting up some data matching, and that is ongoing. I think there's still work to try to develop a memorandum of understanding for what that would look like and how that would work between the county and the districts.
Okay, on that particular point, it seems to me that there is a very clear case for advantage to be had to all parties, but particularly to the County Council, in having a greater pursuance of a single person discount on in council tax. Yet the understanding I have is the county has actually been resistant to greater investment into that area, which is primarily for the benefit of the County Council. Now, it's another good example where the data matching does come in and can be very, very valuable in terms of producing results if the investment is there in order to do it. Is this anything you've been looking at all, whether we have been ensuring that we're getting value for money, or rather are we failing to get value for money by not putting the greater investment into joint arrangements with our district and city councils?
I think in terms of the project that's been suggested and put forward, the county's been very keen to look at progressing that, and the discussions have been around the extent to which we can understand how successful the project is. So negotiating and liaising with the districts to understand what information can they provide to the county in order for us to measure the value of the investment that we put in. And so as far as I understand it, where we are with the memorandum of understanding at the moment is around looking at that, and potentially the current exercise with the National Fraud Initiative could be quite useful in informing decisions made around that, because actually the data matching will be done for us almost for free, but not quite, by the Cabinet Office anyway. We'll get those matches in January, and so potentially the districts will be able to say, look, for the matches we've had in, this is the value that we're seeing, this is the volume that we're able to process, and we can get on a clear footing in terms of having that agreement in place around the county funding further work on data matching on a non-National Fraud Initiative basis.
Okay, can we move on?
If you don't mind, because we don't often get the opportunity to have a wide-ranging debate on subjects as a result of this type of survey. Just on the whistleblowing cases which have been reported, I know it's only year to date, and I know it won't include certain things like safeguarding, which may not be included within there, but 16 whistleblowing cases year to date didn't seem a very large amount. And are we being too restrictive in dealing with what we call whistleblowing? For example, I dare say there are a lot more complaints than there are whistleblowing occasions, but sometimes those complaints are themselves ones which are of a nature of being whistleblowing items. Now, are we too restrictive in how we define something as being part of the whistleblowing process?
I think that's a good question in terms of how we produce the reporting that comes to this committee. The table 7 shows all cases which come into the internal audit team, which could possibly be classed as a whistleblowing. So it does include, grievance, safeguarding, health and safety, all of these categories, even if subsequently, it's referred out of the internal audit team to be dealt with under another procedure. We try to capture the fact that someone somewhere has thought this is a whistleblowing and reported it in. In terms of complaints, some councils do take the decision of reporting complaints and whistleblowings jointly, and there's probably pros and cons to considering looking at that, because some complaints people may view them as whistleblowings while we corporately view them as being a complaint. In terms of the internal audit team, this shows you the contacts that have come to us through our whistleblowing inbox largely, and so that there is a sort of year-on-year comparator, and I would say we're slightly higher this year than we were at the same point last year, but equally sometimes these things do sort of even out. If you decided that you were going to incorporate complaints in whistleblowing, then there would also be a question around, well, do we also want to include all sort of HR cases that come in under our respect at work policies? Do we want to include all issues around health and safety? And so you could end up with a very large volume of things that you're potentially reporting on as if they were whistleblowings, which may sort of overstate the actual extent of whistleblowing. Yeah.
Stephen, just hang on a minute, Chris. Stephen.
Thank you, Chair. I guess just looking ahead to an item we have later on the agenda, which was my personal review of the whistleblowing policy, just to say that I am content that we define whistleblowing appropriately within the authority based on the comprehensive review undertaken by the Council in 2021 of its policy. That's also consistent with other public authorities that I've worked with in terms of our definition. The one thing I would say in terms of Mairead's point, she is absolutely right. We do obviously have a number of other policies that may address issues that come in through the whistleblowing route, but I think characterizing those as whistleblowing could be a potential overstatement, and particularly when we have to give regard to the Public Interest Disclosure Act elements that may relate to a whistleblowing allegation, we need to make sure the reporting is accurate. The only other comment I would make, Mairead mentioned complaints. Of course, we also have to give regard to the local government ombudsman and our requirement to process complaints appropriately from members of the public through that route as well. On that basis, Councillor Bowden, I think we define whistleblowing appropriately for use at present. Thank you.
That's really helpful.
Okay.
Thank you. I have about 20 other questions I could ask, but in fact, probably more if I tried. But there's just one. I'll restrict myself to one if I may. And that is on
if you want to pick up the other 19, Chris, you're welcome to do that separately, either in an email or in a discussion with Mairead and I.
Well, I'll restrict myself to what I think is material for us. And again, it comes back to the National Fraud Initiative and the amount of data matching which has increasingly become available in recent years. And I just wonder, do we as a matter of routine data match, especially with HMRC, every single one of our employees to see if they have other sources of income, which both checking for potential conflicts of interest, but also potentially checking for overworking or working where they shouldn't be working, where in conjunction with them being an employee of ours? Do we do that on a routine basis for everyone?
So the data matching that's undertaken through the National Fraud Initiative does not do that. However, HMRC would see the information that individuals are working for us. So the data that you receive as an authority depends on the data you put in. So we would get alerts if an individual on our payroll at the time of the NFI was working for another public authority specifically and was on their payroll. It wouldn't necessarily pick up consultants or interims or any payments made through an agency, but we wouldn't see kind of the full HMRC information, which would be, however, be picked up by HMRC on their side, if that makes sense. I'm probably not explaining it very well. So the answer is yes, we can see if they're full-time employees of another public authority. Yes, we can see if they have interest as a director of an organisation with which the council trades, or if they are a trustee of a charity also with which the organisation trades. But no, we don't see kind of the full range of income and income sources for employees.
Okay.
We can't see it, or we choose not to go for that.
We can't. Yeah.
Okay, thank you. Just to be clear, the proposed flexible audit plan for various quarters is new to us, isn't it? Is that right? Or at least one quarter is?
One quarter, the last quarter that you see will be completely new. The other ones will be whatever the current iteration is of the version you have seen previously. So there will be changes as things get reprioritized or as the timing of audits is shifted.
Exactly. So can I just draw people's attention to the final quarter's programme of work that is proposed from pages, I think it's 217, 218, the proposed flexible audit plan for Q3 2023-24. If anybody has any particular concerns about any of that work, do let me know either now or subsequently so that we can feed that into Mairead's work plan for next year. Apart from that, thank you for all your comments, questions, and we have noted this report. Thank you. Item 10 is the Audit and Accounts Annual Report, Audit and Accounts Committee Annual Report 2021-22. And Mairead will introduce that, but if I can just draw your attention to the recommendations when I eventually find them. It is the report that I need to present to the full council on the 13th of December. So obviously I will just summarize whatever we agree. But in particular, I would like us to agree that we do a review of this committee's terms of reference and a self-assessment of our effectiveness in line with SIPFA guidance as set out in section 4 of the report. The SIPFA guidance is relatively new guidance that has come out, which is applying to all audit type committees. You probably got it in Finland and elsewhere, and certainly for the combined authority, we're doing a skills assessment there. And I think it's appropriate that we should follow the SIPFA guidance and review our terms of reference and do our own skills audit. But Mairead, would you care to introduce the rest of the report? Thank you.
Thank you, Chair. Not much more to add, just to say the context of the report is that the committee will take this report to full council. It's an update on the activities of this committee covering the 2021 to 22 financial year. Obviously, as this is not going to council until December, there is some overlap into more recent issues, but 2021 to 22 is the focus. It's a draft report. It's been developed so far in conjunction with the chair and the vice chair, and this is really the committee's opportunity to comment on the draft, consider whether there are any further amendments, changes, additions that that you as a committee wish to make before this goes on to full council, which will be on the 13th of December. Thank you.
So I think what we can certainly do is raise in section 3.2.6 on page 248 about BDO, either in the report or subsequently, or 3.2.7, that the chief executive will be raising a formal complaint with BDO, just so that that is entirely up to date. But any other comments, questions, suggestions from anybody? Chris.
Just a general point, which is one which I made the last time this was reviewed. And it's also mentioned that there was a management meeting very recently where this very point was raised as well. And that is that whistleblowing, the word whistleblowing still has a negative connotation, but renaming it to something else will lose some of the impact and clear protection that whistleblowing has. And it's an impossible paradox that I think want to solve. So somehow we need to get the message across to people that making a whistleblowing complaint isn't a bad thing. Now, we're not encouraging people to be frivolous. We don't want to encourage people to be vexatious either, but somehow we have to get away from this idea that you've got to really build up your courage to make a whistleblowing complaint. And it's the very, very last resort when you're absolutely desperate. And I don't know quite how that should be done, but I think that's where our chief executive needs to give a lead and try and work out how in other places they manage to get a whistleblowing policy working in a cooperative way so that people don't feel stigmatized almost by entering into it.
Well, that's very timely, and page 254 of the whistleblowing policy paper says CLT considered renaming the policy raising concerns, but felt that that wasn't appropriate. Whistleblowing is clear amongst many people that under the law and such like, so it would be unwise for us to change it. But before we move on to that, can we just confirm that we're happy with the annual report, and I will present it in the December full council meeting. Simone.
Yeah, thank you, Chair. Just looking at 3.3 whistleblowing referrals, is it wise to put in the report that we're going to see in a minute, as in the chief executive has looked at it and reviewed it as well? Is it worth mentioning that?
I always have to be careful as to which financial year I'm referring to when I present this, but I can. I think it is probably legitimate in this instance to say that the chief executive has, since the end of the year, or has recently reviewed the policy and made some very minor changes. But I'm happy that we should include that, Mairead. Thank you, Simone. No other comments? So we'll take that as the broad thrust of the report, which I will present. Now we're nearly to 2 hours. We could have a break, or we could just finish. Should we just aim to finish quickly? And Stephen's got another meeting up at 4, so we will definitely finish by well before then. Next item then is the whistleblowing policy review, and can I ask Stephen to present what he's done? Thank you.
Thank you, Chair. In introducing this report to committee, can I first of all just thank Mairead for her support with this work, and also my executive officer, Edward Groom, who supported this review of the work that I undertook. I don't actually need to say a great deal other than we've already said to committee. The reality is the fulsome review Council undertook of its whistleblowing policy in 2021 was sensible, appropriate, reflects well on the authority, and is consistent with how whistleblowing is applied in many other public bodies. I think the officers and members involved in that review in 2021 should actually be commended for the improvements they made at that time. Councillor Bowden's earlier question actually gets to the heart of the issue, however. The policy can be as robust as we like. The implementation and adoption of the policy is the more fundamental issue. And whilst I wouldn't propose to rename the policy based on my review, having seen exactly the problems we discussed earlier encountered, so by calling it raising concerns in the NHS, dare I say, I saw this policy having everything, including the kitchen sink, being thrown into it, rather than things being appropriately tackled under HR-related policies by employees particularly. So at this stage, I think leaving it as whistleblowing is wholly appropriate. More broadly, however, there is the issue around how do we promote, endorse and encourage people to see that this is not something they either need to be brave to apply, or indeed they need to feel that there is a risk in raising concerns to them. So I think, again, we will continue to promote that through a number of internal communications routes and through management teams. I have committed as part of that to lead one of our Cambridgeshire conversations, which I undertake fortnightly with usually around 400 members of staff live, and then that's recorded for sharing with every other employee in the authority. I'll make sure that we cover that again. We have mentioned whistleblowing earlier this year in one of the Cambridgeshire conversations, but we'll do so again. Chair, I guess the final point in terms of this report that I wanted to make, though, whilst we've done some very good work as an authority, and whilst I think our policy stands up well against other organisations, I would like to suggest to members that when we next review the policy, because we do this annually to make sure it remains robust, we should consider, and I'm only saying consider at this stage, because of course that would involve an appropriate process using contract procedure rules, engaging an organisation like Protect, formerly known as Public Concern at Work, to undertake an externally validated benchmarking process for our whistleblowing policy. And that wouldn't just be looking at the policy. It would look at our governance in respect of whistleblowing. It would look at the content of our policy. And importantly, it would look at the organisation's culture and staff engagement with whistleblowing. So having worked with that organisation and other bodies where I've been creating whistleblowing policies from scratch, their services are hugely helpful. And for the benefit of members, they don't work exclusively in the public sector. They also work with a number of private sector and large national bodies. So I think there is some real value in seeking external opinion from a body like them for our next review. Beyond that, Chair, I would recommend that we re-endorse the policy, having updated it to fit with the Council's revised organisational structure. Happy to take any comments or questions. Thank you.
Thank you, Stephen. Any comments, questions, Alison?
Thank you, Chair. It's always a challenging one, whistleblowing, excuse me. Primarily, it is something which has kind of been alluded to around whistleblowing has a very bad name. There is also the fact that when you've been on the side where you've come across things of a significant nature, because I think you have to divide this between things which are fairly minor, but actually need dealing with, and substantial issues. Where you come across substantial issues that you want to, you feel that ought to be brought to attention, things that actually could have dramatic implications for staff, the organisation, and so forth, it can become extremely difficult for people to honestly step forward. No matter what you try and do, those people believe, and sadly, I do have to say that I have real life examples of people whose jobs had disappeared, even though they had proved to have valid concerns. Their jobs didn't disappear because they made the complaint, but all of a sudden their performance suddenly deteriorates according to their superiors. They don't get the progression that they were getting. They don't get the opportunities. They find themselves completely sidelined by the organisation. So we have to bear in mind that the culture, the belief that people have is absolutely fundamental around this. So anything you can do to reassure and to audit the actual outcomes for those people. So this is not looking at whether or not they had a valid complaint. This is looking at the individual and saying, has that individual been disadvantaged by coming forward? Because I think that that really, really is very, very important. You know, there is a sense that if, you know, they find out, you know, if the rest of the staff find out who that person is, and one particular example I can think of that actually happened fairly recently, a particular person went out there, you know, found out who had actually raised the concerns about them, and then went round themselves and made sure that every other member of staff was aware that someone had actually raised a concern about them. As a consequence, no one would work with that person any longer. And we have to be absolutely certain that that cannot happen to anyone here. So the more you can emphasize, the more you can do to bring people through on that journey, the better it would be. So thank you.
Yeah, no, I agree with everything there. Stephen.
Chair, just to say I recognise entirely and understand Councillor Whelan's points. Dare I say I had the responsibility for leading the development of revised national whistleblowing arrangements for the NHS following Sir Robert Francis's inquiry into the catastrophic failures of care in Mid Staffordshire NHS Foundation Trust. And those are exactly the types of problems that were occurring. And in fact, I think I may have made reference to this in the paper, but if not, I think, again, to both Councillors Whelan and Bowden's points, the media coverage of whistleblowing unfortunately creates negative connotations because they only ever talk about, dare I say, those cases where people have had poor experiences, have ended up having to take legal proceedings against organisations or have suffered huge detriment. You very rarely hear about positive outcomes in respect of whistleblowing allegations being raised, which I think is actually quite problematic in terms of creating a culture where people do want to step forward and raise these types of issues. So I absolutely endorse the points you're making. And I will, I have given my commitment since I joined the authority, but I will reaffirm that to try and encourage people to come forward and know that there should be no detriment, and where they are choosing to raise their concerns in a manner that we know who they are, because of course they can choose to be anonymous, we will keep an eye on them in a positive way to make sure they are not suffering detriment beyond the point at which they've raised a concern. And I think that's the action of a good employer anyway, from a duty of care perspective. So thank you for raising the points.
Okay, thank you very much. Simone.
Thank you for that, Alison. That's really actually brought a tear to my eye, that. So yeah, thank you for that. I would actually like to suggest that we put this out to not just new councillors, but we'll put this out to councillors now again, because I think, you know, it should be on the forefront. Thank you.
Okay. And I think we'd all agree that at the appropriate time, engaging with somebody like Protect, not necessarily Protect, but somebody like Protect would be a good way of benchmarking not just the policy, but the way it's been implemented as well, to ensure that the points that you both raised are picked up. Okay, thank you very much. So with that, thank you, Stephen. And we are reapproving the County Council's whistleblowing policy with the minor amendments to names and such like telephone numbers that you've included. We're now on to the final item, the committee agenda plan, and ask Dawn to update us on the agenda plan, please.
I have nothing to add, Chair, as it is, unless members have any comment.
Can't immediately get down to it, but anybody got any comments or anything on it? When I looked at it before, it all seemed very sensible. I'll put in my usual plea. Can we have an update on FACT and HACT and ESACT as soon as sensible, please? It just seems to have been dragging on and on and on.
Chairman, Chair, FACT and HACT and ESACT no longer exist, although technically HACT continues to exist, but it's changed its name to FACT, and FACT no longer exists, being very technical. But there's only one organisation now.
That's absolutely fine, Chris. So what is the situation with the county council? And do we as a committee need to know about it, understand about it, approve anything that has been undertaken or not undertaken?
As the county council appointed trustee to fact, I think it's inappropriate for me to give an answer to that. I think others should do so.
Chair, a very brief comment because I'm conscious we're in public session, just to say that work is ongoing in respect of fact, including by the county council and other agencies, and that's probably all I can say in a public environment. Thank you.
Okay, well, at the appropriate time, could we either have a private session or you could brief us as to what we're allowed to know or say and so on. Thank you. Thank you very much. So thank you, everyone. I think that concludes our meeting today. The next committee meeting is on the 9th of February at 2 o'clock. I'd like to thank everyone for attending and for everyone who has been watching on YouTube. So Dan, if you care to